day to everyone joining up from around the world. Whether are you just waking up, midway through your trading sections, or waiting for the night, welcome. On behalf of entire WeMasterTrade teams, we are truly pleased to have you here with us for this global live stream sections. My name is Daisy and I will guide you through this exciting 2-hour journey as your host. Today live streams is not just a presentation, it's a conversation. It's a window into the interior rooms, one of the most fast-growing and forward-thinking funded trading firms in the industries. And of course, I'm not here alone. I'm joined by two remarkable guests who have shared what WeMasterTrade represent today. Skilled traders, mentors, and role models within our communities. First, let me introduce the ever composed, always insightful Pose. Welcome, Pose.
Thank you so much, Daisy. Hello, everyone, and thank you for spending your time with us. I'm truly looking forward to today's session. There's so much to cover, not just about trading strategies or rules, but about the full ecosystem that WeMasterTrade offers, from how you start, how you grow, to how you earn. This is the kind of platform that doesn't just fund trades, it builds traders.
Absolutely. And next to him is someone who brings sharp analysis and clarity to every chat and conversations. She is strategic, she's sharp, and she's a real force in our trading space. Please welcome Helen.
Thank you, Daisy, and hello to everyone in the chat. I'm genuinely thrilled to be here. What excites me more about today is that we're going to unpack everything, not just what's about the WeMasterTrade offer, but how traders can truly take advantage of this part of our system. From packages to promotion to scaling and long-term profit sharing. If you ever had a question about that, today is the day to ask them.
And that's exactly what we're here for. Whether you are brand new to WeMasterTrade or already a part of our funded trader programs, today's live stream is going to give you the full pictures, not just the highlight reels. Over the course of these sections, we are going to walk you through what WeMasterTrade truly is, what we believe in, how our programs are designed, and why we're doing things differently from traditional brokers or prop firms. Now, I want to be clear, this isn't about sales, it's about understanding. We want you to know what you are signing up for, what kind of structure support your journeys, and how you can use that structure to not just trade, but scale.
And speaking of structure, we'll begin by sharing the story behind WeMasterTrade, how we were formed as a funding project, not a broker. Really a very important distinction. Unlike brokers who profit from volume or loss, WeMasterTrade is built on the belief that your society and our success. We invest capital in traders, cover the risk for them, and share profit only you do well. That's the foundation.
Exactly. And from that philosophy flows everything we offer, especially our trading packages, which we'll be discussing in detail. We'll explain the logic behind each one, what kind of trader they ever look at our packages and thought, which one is right for me. Today we'll answer that.
And more than that, we will also do a live comparisons between packages. We will break down pricing, account size, maximum drawdowns, consistency rules, and even payout side by side to help you make a fully informed decision. This is one thing to see numbers on the website. It's another thing to understand the intention behind them.
Right, and when you understand the packages, the next question is always, how do I stay healthy and avoid trading? So we will move naturally into discussing trading rules, which honestly is one of the most important parts of today's session. We'll explain the daily loss A, how it calculates and why it includes both loss, close and floating profit and loss, and how to avoid violating it, especially overnight. We will go into the maximum total loss, the consistency ratio, and we will even address common misunderstanding about trade sizing and record trade policy.
And we won't just explain rules in isolation. We explain them in the context of live trading decisions. I'll share some personal examples of mistakes I made when I first started trading under funded conditions and how I adjusted. because rules aren't meant to restrict you, they're there to protect the integrity of your growth.
And while we are on the topics of helping you success, we will be guiding you through our current promotion plans, including limited time discount codes, trader support campaigns, capital opportunities, and how to properly qualify and submit proof. We have some amazing response to our promotion, but also some confusions. So we will be showing you exactly what to do step by step.
And from that, we'll transition into a discussion on our scale up plans, which unfortunately think is one of the most underrated parts of WeMasterTrade offering. Many people don't realize this, but we have a structured world pathway in place. If you perform well consistently, you don't just get payout, you actually unlock higher capital tier. It's not just about getting funding one, it's about evolving into the six-figure funding trader.
And speaking of growth, one of the most powerful ways to build long-term income in WeMasterTrade is through our profit-sharing model. This is the heart of what makes us different from prop firms. When you trade on a funding account and generate profit without breaking rules, we share that profit with you up to 90%, but there's more to it than just the percentage. We'll explain the full payout cycle, thresholds, and timelines today.
Now, I know many of you watching today aren't yet traders. You're also educators, influencers, or people with a lot of networks. That's why we are also taking time to explain our affiliate programs, and we will do it transparently. We will walk you through how commissions are calculated, how affiliate referral are tracked, and more importantly, what you need to qualify for payouts, including a detailed explanations of two referral rules and minimum funding conditions.
And this is actually important because we want our partner to feel confident and clear about their earning. We seem to have grown in affiliate activity recently, and we want to ensure everyone is promoting rapidly, understanding the term, and building long-term income stream.
So as you can tell, it's not just a surface level live streams. We are diving everything, packages, growth, promotes, scale up paths, affiliate opportunities, all with one purpose in mind, helping you make the most informed decisions possible.
And we want this to be interactive, not just informative. So if you have a question at any point, please drop it in the chat. Our moderators are watching and we'll answer as many questions live as we can. Your voice matters.
And if you're watching this on replay, don't worry, we'll leave that timestamp and somewhere below, and you can always reach out to our team with any follow-up inquiry. Our support is incredible, and they really care about helping traders succeed.
It's just a platform, it's a commitment to build real traders, structures and scalable pathways who are serious. So if you're here to grow and to take action where you need to be, let's dive into the journey together. Let's begin and once again. Trading rules and promotional mechanics. We want to take a moment full pictures of who WeMasterTrade really and why we built this platform. Because when you are putting your trust and your tradings into a company's understanding philosophies, it isn't just helpful, it's essential. And so this next segment is about origins, intentions, and impacts. It's about how WeMasterTrade began, what value underpin the firms, and how those values translate into the real tools and outcomes for traders like you. And to walk you through that, I'm Joyce, as a way by two people who live and breathe their principle, pose and highlands. Let's start at the beginning.
Thanks, Daisy. To truly understand WeMasterTrade, you need to understand why it was created. Unlike many platforms or brokers that evolved from traditional financial institutions, WeMasterTrade was born with a purpose-driven mission to give capable traders access to capital regardless of their background, location, or financial situation. We were founded in 2022 as part of the WeCopyTrade Group, headquartered in Vancouver, Canada. While WeCopyTrade built its name on signal sharing, investor networks, and copy trading tech, WeMasterTrade was designed to serve a more focused vision to identify, support, and scale high potential traders, giving them a pathway to earn professionally without risking their own savings.
And it's important to know WeMasterTrade is not a broker. That's not just a label, it's a fundamental difference. We don't profit from spread or commissions. Our success is directly tied to the success of our trader. That's why everything we build, from our instant funding packages to our profit sharing model, is structured with alignment in mind. We take on the capital risk, we review the roadmap, you bring the skill. But we also know that scale alone is not enough. We get why one of our foundation principles is education first. We don't want the trader to blindly follow rules. We want them to understand the logic behind the structure. That's why we invest heavily into the WeMasterTrade Academy, a training ecosystem built to take you from beginner to consistently funded professional.
And that academy is something special, with courses ranging from introductory trading psychologies all the way to advanced risk calculation and multi-asset strategy designs. The WeMasterTrade Academy isn't just about theories, it's about the implementation. We designed the curriculum to match the real-world trading environments within WeMasterTrade. So what you learn, you can apply directly to your fund accounts. And to ensure that our systems and contents meet global standards, WeMasterTrade is proud to hold an ISO certification, which confirms that our educational products and trader development programs meet rigorous international criteria for quality, structures, and learner engagement.
That certification is a big deal because it shows our long-term commitment to developing traders, not just collecting fees. In an industry where many so-called prop firms come and go, WeMasterTrade has positioned itself with real operational stability, compliance frameworks, and internal accountability. We're not here for a season, we're here to help build careers.
And we think that commitment translates into real story. If you visit our testimonial page, we will find traders from Nigeria, Vietnam, Canada, the Philippines, and South Africa. I'm talking about how we want to help them not just earn more, but trade with purpose. They talk about the passing challenges after a year of struggling with the retail broker. They talk about finally being able to trade without the emotional burden of risking fractional funds. We had the student become full-time trader. We had the women re-enter the finance world after the career break. And we had a young professional from underbankers region finally access the markets with a funding account. That's the impact, and that's what drives.
And it doesn't stop there. The WeMasterTrade ecosystem is designed to grow with you. For those who want to stay engaged and up to date, we maintain a regularly updated blog section where our teams of experts and educators share quickly insight, trading psychology breakdown, market reaction, and platform updates. We believe that learning never ends, and we keep our traders informed. But let's also talk about the cultures. What makes WeMasterTrade's difference isn't just the product offerings, it's the community mindset. We actively promote trader integrities, respectful competitions, and knowledge sharings. Whether you are in the Telegram group, watching our YouTube series, or engaging with us online support, we will see that we actually listen.
And speaking honestly here, in many platforms, the trader is just a customer. And we must trade, the trader is the product. Your performance drives the business. Your voice shapes the platform. And your consistency determines how far we can scale together. That mutual accountability is rare and it's something we're proud of.
If you ever doubt whether this party will, whether the trading career is truly within reach, I encourage you to read the testimonial, take a look at our funding account, and connect with people who will fully listen. The stories are real, the capital is real, and your reserves speak for themselves.
And to summarize, WeMasterTrade is a capital allocator, a talent accelerator, and an education for trading institution. We are here to challenge the status quo of trading access, to build systems and to build the systems that reward performance over promotion and to create growth, scalable income opportunity for traders around the world, regardless of their starting points. This is more than a platform, it is a trading movement. And if you are ready to be a part of it, today LiveStream will show you everything you need to know. Thank you, Paul and Helen, for that deep and honest walkthroughs. Coming up next, we are going to take the foundations and connect it directly to our actual offering. That means we will be discussing all the different account packages available as WeMasterTrade, how they differ, who they are designed for, and what kind of results you can expect from it. Now that we've explored who WeMasterTrade is and the principle we stand for, it's time to move into the most essential parts of the live streams and an in-depth discussions on our account packages. This is where it all begins for most traders, choosing the structure that's best aligned with their goals, their styles, and their current skill level. And when we say packages, we are not just talking about dollar figures, we are talking about the frameworks. Each package as WeMasterTrade presents a different pathway to work growth, and today we will walk you through all of them, what they offer, how they are structured, and most importantly, who they are designed for.
Exactly, Daisy. We must trade. We don't believe in one size fits all model. That's why we built two distinct product lines for traders, the challenge package and the instant funding package. Each line includes a variety of account size and configurations. Because we know that traders come with different strengths, risk appetites, and timelines.
Let's begin with the challenge model, a two-phase evaluation system for traders who want to grow their skill before being allocated capital. This structure is fair and has become the most popular rule for new traders entering the WeMasterTrade ecosystem.
In the challenge model, you should begin with a simulated account, and your goal is to meet specific profit targets while staying within strict but reasonable risk parameters. There are three stages in total: phase 1, phase 2, and then the funding stage.
Take for an instance our $10,000 challenge, a great starting point for traders who want to minimize upfront costs while building a track record. Let's break down phase by phase.
In phase 1, you need to achieve an 8% profit target, which is $800, with breaching a 5% daily loss or a 10% overall loss limit. You have unlimited time to achieve this. That's a key difference from many platforms. We don't pressure you with deadlines.
When to when your profit target drop to the 6%, and that doesn't can work. The risk will remain the same, and here's something unique. In the phase 2, you already start receiving a 30% profit share if you exceed the target.
Finally, once the phases are cleared, you enter the funded account, where you trade with your capital, have no profit targets, and your profit share jumps to 90%. That's one of the highest in this industry.
And this is a carry idea for newer trader or experienced trader who want to start with lower pressure and learn the station. If you still refine your strategy or want to get a feel for WeMasterTrade risk framework before scaling, it is a perfect package to begin with.
Now, for those who are confident in their strategies and want to start with a larger account size, we offer $25,000, $50,000, and $100,000 challenge packages. The structure is similar: two phase, the same 5% daily and 10% total loss limits, but the profit target scale proportionally.
For example, and the $50,000 challenge, you need to hit 4,000 in phase 1 and 3,000 in phase 2. While the targets are higher, the leverage remains the same. 1 divided into 100, giving you room to adjust position sizing.
And the 25,000 to 100,000 challenge are ideal for traders who are a trader with more capital management experience, especially if they're looking to eventually scale into the larger funding account. If you already passed the order of challenges or have a strong verified trading history, this is a good step up.
Every challenge package with a one-time fee. For example, the $45 for the $10,000 challenge. This fee is refundable once you become and meet minimum performance conditions. And if they don't go your way, you are eligible for a 30% recess discount to start first. What if you don't want to go through a challenge at all, but instead want to accept the real capital immediately and get paid based purely on results? That's where our instant funding packages come into play.
And this is where WeMasterTrade truly set itself apart. Our instant funding model is designed to give experienced, excellent trader the chance to trade real capital from day one. No evaluations, no demo stage, just pure live trading, backed by structure, fair and transparent system.
And what makes it even more accessible is that you can choose from several different account types depending on your style, preferences, and goals. Today, we're going to walk you through each of the 5 main instant funding packages: standard, 5-10-10, 5-10-0, 5-10-10 no PC, and customized. We'll compare the details, but more importantly, we'll help you figure out which package is right for you.
Okay, let me set the scene quickly. All of our instant funding packages give you live trading except from the ones. That means no challenge phase, no evolutions. You pay once, follow the rules, and you are trading like capital. And every account, no matter the size, includes no time limits, up to 90% profit share, scale up plan to worth $1 million, support EAs, swing trades, scalp links, and even XFDs. Now let's go to and as we go, post and Thailand. I want you to jump in with the real advice. Who should actually choose which one, and what kind of trader you will suggest with it?
Let's start with the standard package. I always describe this one as the best friend for traders who just want stability. You're getting up to 200,000 in capital with a very manageable 4% daily loss limit and 6% overall limit.
It's like that scam, study account that doesn't put you to overtrade. And with the profit split up to 90%, that's really an important event. You're taking a slow and steady approach.
And how about commission?
Competitive across the board. Forex at $4 per lot, gold at $4 per lot, indices at $1, stocks at just $0.07 per lot.
And everything it allows news trading and scalping, weekend holding, EA, SFT, you name it.
So for the audience, if you are someone who trade regularly, understand your strategies, want a full range of assets, and plan to play the long games, this is your sweet spot.
And it's perfect for intermediate to advanced traders who already know their ass but don't want to struggle with the tyrants may challenge. And if you ever have an account low due to unrealistic rule, you will find the standard model refresh really fair.
I would also say issue swing traders. The 4-6% risk profile gives just enough flexibility to hold multi-day positions, especially with weekend holding fully allowed.
Alright, moving up a gear, let's talk about the 5-10-10 packet. Same capital sterling up to the $200,000. But you now get the 5% daily loss and 5% overall limits. Why does that matter?
That extra cushion is massive for traders who scale into position or take multiple in per setup. You got more room to grab, especially in high volatility market.
And the profit target here is also 10%, which aligns well with the risk window. Plus, you still get full support from scalping, EAs, news trading. It's very trader friendly.
This is bad for day trader, especially though trading a stock like NASDAQ or gold that's move fast. If you got detached into the strategy and just need some great rating room, this is your pocket.
And also for traders who want structure but don't mind having that profit target, the climb milestone motivates some people, especially if they're payout oriented.
Now here a personal favorite, the 5-10 euros. You get the 5% daily and 10% overall loss but no profit targets.
And that's a blessing for high precision traders. You're no longer chasing a number. You just focus on protecting equity and growing capital slowly and safely.
This one is loved by low frequency trader and sniper. If you enter from 3 to 5 trade a week, within your speed, you're not personalized for patient, you actually reward for it.
Veterans, swing traders, risk-conscious traders, people who prioritize consistency over speed. If that's you, you thrive here.
And let's be honest, not everyone wants to hit targets. Some just want to trade well and scale cleanly. This is their home.
Now for the rule breakers, or rather, those who don't want to be evaluated on how even their profits are. The 5-10-10 no PC remove the profit consistency tracking, right?
Exactly, same file and intent with profile, but you're not required to keep your profit growth more.
That said, trade copiers are not allowed in this one, so it's for manual traders only. And you need to trade responsibly. But for aggressive traders who sometimes hit big spikes, this is the place.
And it perfect for higher reward trader or anyone who had an issue with consistency rule at other platform. You try how you want and just get inside roundabouts.
And last not but least, the customized package. This is with WeMasterTrade saying, you know what you need and let's build it together.
You can adjust daily loss, overall loss to your liking. Plus, you can find up to 400,000 more than any other account.
Is premium, flexible, and come with all trading style allowed, including EAs, new trading, weekend holding, SHT, and more. And 24 for the top tier professional, like has fund trader, signal profiler, high volume trader, anyone with a very specific structure in mind. This market let you build it.
I always say, if you try other models and nothing quite fits, build your own blueprint with customize. The freedom is rare.
And to sum up, every instant funding package we offer with the clear risk parameters, fair commissions, deep market access, and real profit potential. There are no time limits, and payout starts as early as 1 day in.
And no matter your strategy, scalping, swing, angle, or manual, there's an account that aligns with you. The key is picking the right one now, so you can start building consistency from the start.
And if you're ever unsure, our team is available 24/7 to guide you. But the real secret, pick the account that fits your discipline, not your dream. But one fit always outperforming the beginning of promise.
And up next, we will walk you through exactly how to protect your accounts, avoid breaches, and understand the key risks and consistency rules that power our entire platform. Alright traders, now that you've seen the packages, let's talk about the parts that either make or break your accounts. The surprise is time to dig into the trading rules and how to actually stay compliant while you are funded. Because let's be honest, getting funded is exciting, but staying funded, that's where the game really begins. And the number one reason traders lose their accounts is come down to the one thing, the daily loss limit.
Yeah, the daily loss. It's the one rule trader team they understand. And so if it's kicked them out of that how at 17 p.m. on the running today.
But here's the good news. Once you understand how it works, really works, it becomes one of the best tools for risk control. So today, let's break it down from top to bottom.
So what is the daily loss limit, also called the maximum daily loss?
It's the maximum amount of loss you're allowed to incur in both floating and closed trades on any single trading day. If your equity falls below that limit, even for a moment, your account is automatically closed.
And the key thing here is daily loss is calculated from the higher of either your balance or your equity at the start of the trading day. That's really important distinction, and it's what trips a lot of people up.
And let's walk through the live examples. Imagine at the start of day 5, your balance is $105,000. Your equities, however, is higher, $107,000 because of open floating profit.
If you're on a 4% daily loss limit, we calculate it off the higher number, 107,000.
So 4% of 107,000 is around 4,000. That means your credit for the rest of the that day can drop below the 102,000 and boom, that account is gone.
Right, and I think it's important to point this out. The system isn't waiting for a close, it's real time. Even if your trade is floating loss and you haven't closed yet, if your equity dips below that threshold for even a second, that's it.
Now let's reverse it. Say at the start of the day 7, your balance is 100,000, but your equity is now 99,000. Before your open trade at slightly loss.
Since balance is higher, we base the 4% on the initial balance, so 4,000.
So now your equities must stay above the $96,000 throughout the days. If it drops to $95,999, auto liquidation kick-ins, no warnings, no margin call.
And what happens if you break it? The system will send a market order to close all trades. Everything liquidates. Your account is disabled and you can try again unless you purchase a new packet.
And here's the kicker. The auto close happens when the system detects the threshold was crossed. But due to the market fluctuations, the final P&L might look worse than the actual threshold. That's because the system executes a closer base of price slippage at the time of liquidation.
So even if you only intend to take a $3,900 loss, once slippage spike goes on Nasdaq and suddenly it is $4,200. That's why we say don't write the X.
Alright, let's talk about how to avoid violating this rule because this is where the rule mindset kicks in.
First tip, know your buffer. Never plan trades to take you right up to the edge of your limit. Leave at least 10 to 15% room below the max loss, especially in volatile markets.
Tip 2. Check your equity, not just your balance. I can stress this enough. Most traders stare at the balance already, but your floating lot is running your equity and you're heading toward a violation.
Tip 3 is use the dashboard or tracker. Inside WeMasterTrade, we provide a risk dashboard that shows you your live loss status. View them, check them, and don't rely on your memory.
Also, post trading after a big loss early in the day. If you lost 3% in the first hour of London session, maybe it's time to stop and reflect, not try to revenge trade your way back up.
Another big one, trade smaller during near hours. If your trading goal during SFP with full loss side, you probably back into the break the late loss rule. Conversions are producing side and rifle volatility.
And what's on the top rookie mistake you see when it comes to daily loss?
Number 1. Over leveraging. Traders opening positions that are 5, 6, 7% of their account, thinking they close quickly. But if a trade turns red fast, it's already too late.
Number 2, holding overnight without checking exposure. If you hold 3 trades overnight and wake up to a city peak graph, the daily loss could be hit before you even open your eyes.
And the third, assuming that close trades are all that matter, and they are not. Remember, equities includes both floatings and closed positions. The total equities lies in your score.
I always say this to new traders, the daily loss rule isn't your enemy, it's your account error. It's designed to protect you from doing something irreversible.
Exactly, it's for deep ceiling. You can be aggressive, but only within the box. And if you learn to trade inside that small, it will last longer than 60% of the market.
And one last note, it isn't about rules, it's about trust. We WeMasterTrade fund you because we trust you responsibly. The daily loss is there to protect that trust on both sides. And that's it about the daily loss. We thank you for tuning in. I will be taking a short break and will return in just a few minutes to continue the live streams, and we will resume shortly. Your patience is greatly appreciated. Welcome back traders. In the previous segments we covered the daily loss rules, and if you haven't already clicked us once, you are missing those. But now we move from the daily batteries to the absolute battery. I'm talking about the maximum loss rules, also known as your account stop loss, the lines that can't be crossed, not just for the days but for the entire life of your accounts.
This is where a lot of traders misunderstand how the rules work. They think, well, I didn't hit my daily limit, so I'm fine. But then a week later, they chip away at their account and suddenly liquidation.
The max loss rule in the last session is if daily loss is your daily loss seatbelt, then max loss is your airbag. If that limit is hit, it means account is deemed unslayable under your current strategy and it's closed immediately.
So what exactly is the max lot rules? Let's define it simply. It's the total maximum amount you are allowed to lose across all traders for the entire accounts. If your equities, that is, your real-time capital including open trades, ever up below the certain percentage of your starting balance, your account is gone. Period.
And unlike the daily loss, which resets every day, this one doesn't reset. It's cumulative. You can lose 2% one day, 3% the next, and if your total loss crosses the line, and that's it.
And the percentage limit depends on your packet. It typically either 6% or 10% of your initial balance, not yet your equity, not your profit, but the original number you start with.
Let's work through concrete examples. Suppose you have an instant funding account with an initial balance of $50,000 and your max lot limit is 6%, which is $3,000.
That means your equity can never go below 447,000 ever. Doesn't matter if you made 1,000 yesterday, the total loss from your highest point back down to that threshold is what matters.
And remember, this rule includes both low losses and floating losses. And if your lot 2,000 in flow trade and you have an order the 1,200 floating rate, your equity now at the 46,800. That below limit account closed.
And just to be clear, it's not about the net gains or loss across traders. It's about where your equity stands in real time relative to that stop loss floor.
Here's where it gets interesting and a little tricky. Let's say your account grew to 51,000. Congrats, you're in profit.
But your max loss limit is still based on your original 50,000 starting balance. So if your limit is 6% and threshold is still the 47,000, what chance is how much room you have for before you hit it?
Exactly. You now have the $4,000 in total buffer because $51,000 minus $47,000 equal the $4,000. So your profit gives your cushion, but the floor never moves.
And what happens when you break it? When your equity drop below that maximum loss threshold, even by a few dollars, auto liquidation trigger, all trade are closed immediately as the market price.
And again, like with the daily loss, if there's volatility or slippage, your account might close out below the line. That's just execution reality.
And more importantly, once it's breached, that account is permanently disabled. You will need to purchase a new package if you want to continue trading. No resets, no rollback.
Alright, let's get tactical. How do you actually trade inside this rule without consistently worrying about it?
First, track the total losses every day. You should always know how close you are to your max loss floor. Don't wait for the dash floor warning. calculated manually.
Second, use your profit as protection, not permission. Don't treat floating profit as a green light to increase risk. Instead, consider locking in again by reducing loss size when you are ahead.
Third, manage your floating loss aggressively. Even if you are positive overall, a single trade with poor stop placements can take you from safety to shutdown in a minute.
Fourth, stay cool when you're close. If you're down 5% out of your 6% limit, that is not the time to double down. That's the time to step away, pause, and rethink your entries.
And the biggest mistake, underestimating floating drawdown. Trader float we losing thing. Okay, I still got room, but they forgot about the 4 trade floating minus 1,800.
Second, traders who chase recovery after a bad day, they lose 4% in one day, come back swinging the next day, thinking they make it back, and instead take another 2%, boom, violation.
The third, and this one hurts, ignoring clickbaits during major news. Even with a tight stop, new candles can cap you straight through your limit.
Smart loss rule is there for a reason. It's not there to punish you, it's there to protect you from yourself. Every successful trader I know sees their stop loss, whether personal or institutional, as a non-negotiable boundary.
Right, it's a reality check. If you're consistently rushing up against your mark loss, but the problem isn't the rule. The problem is your system or your psychology.
As WeMasterTrade, we're not just giving capitals, we're teaching structures, and the martial arts rules is what separates gamble from professionals. So you remember, your max loss is a percentage of your starting balance, typically 6% or 10%. It's calculated using equities, not balance. It includes both closes and floating losses. And once breaks, your account is gone. And coming up next, we will explore the consistency rules and why steady profit matters more than a big spikes when it comes to growing, scaling, and getting best.
If you ever make 5,000 in one day and then make 200 in the next 4 days and wonder why your payout got flat, the next step month is for you.
Let's dive into the rhythm of profitability and how to stay consistent under the WeMasterTrade model.
Alright, traders, we will talk about the daily loss limits and which it covers the maximum loss rule, two pillars of protecting your capitals. But now it's time to shift gears just a little and talk not about risk but about the results. Because here the things it's not just about staying alive in the games. As we trades, we want to see traders grow, scales, and actually earns. And to do that, you need more than just a winning days. You need something called profit consistency.
This rule right here, the profit consistency rule, is what separates a lucky spike from a reliable trader. It tells us whether you can make money over time or if you're just hoping to hit one big winner and roll the dice.
And more importantly, it's also how we evaluate with if a trader is eligible for withdrawal, profit sharing, even scale up. So if you're fun and you're wondering why your payout didn't go through, this rule could be the reason.
So let's define it clearly. The profit consistency ratio is a measure of how even your profits are from day to day. The more balanced your profits, the lower your ratio. The less consistent, meaning you have a one giant profit days and then smaller or losing days, the higher your ratio.
The idea is simple. If 80% of your total profit came from one day, that's not consistency, that's luck or risk. What we want to see is traders who make profit day after day, even if it's small. That's what we can scale.
And how it is calculated. The formula is really straightforward. Take your the bad trading day profit and divide it by your overall profit in your start the account, then multiply by 100.
So the formulas is the best day divide total profits multiple 100 equal profit percentage percent.
And just to be clear, best day refers to your highest close profit in a single calendar day, and total profit is the sum of all your close profits minus any closed losses or open losses across the life of the account.
And let's say you have the following result over 5 trading day. Day 1 at the 100, day 2 the 200, day 3 minus 50, day 4 100, and day 5 60.
That means your total net profit across 5 days is 100 plus 200 minus 50 plus 100 plus 60 equal to 410.
And the best day was day 2, that is $200 profit.
Now we apply the formula to hundreds divide 410 equal to 0.4878. Multiply that by 100 and get a profit efficiency ratio up to 48.78%.
Now, let's say your account requires 20% profit consistency, which is common. This trader is way above that, so they couldn't qualify for a payout yet.
So even though the traders are profitable, they are not consistent enough. They have one big day and make up almost half of their total profit. That is not sustainable, and that's what we are looking at.
And this is where I really want to speak to traders. If you're relying on 1 or 2 big days to carry out your entire account, that's not professional trading. That's volatility. You can get lucky, but you won't stay funded.
And remember, it's not just about your payout this week. WeMasterTrade evaluate your consistency over time. Traders who show long-term balance are the one who gets cover, who get fitter, who get trust with more capital.
Alright, so let's address the numbers. What is an unacceptable profit consistency ratio?
Typically, the rule is set at 20%. That means your bad day should not exceed 20% of your overall profit. Let's say you're over the limit. Don't panic. You're not disqualified. You just need to keep trading it, even out the curve.
Here's how to do that. Trade smaller size for a few days. 2. Take smaller, control wins. Aim for 200, 300 days. Avoid big swing trade that could spike your ratio again. 4. Spread profit across multiple days. Not one monster setup.
And follow using EAs. Monitor your equity curve. If your EAs is skewing profit heavily into one day, you may need to rebalance it. The box might be profitable, but it won't pass the rules unless it's configured with payout logic in mind.
Okay, let's talk about some common mistakes to avoid. Mistake number 1, trader hitting targets early, then taking the rest of the week off. That is play your bad day and leave the rest of your curve flat.
Mistake 2. Overtrading after a big day, thinking I'm safe now, and trying to squeeze more instead of averaging out that high ratio.
Mistake 3 is thinking this rules is just a hurdle. It's not. It's a reflection of what we actually look for in our master trader.
So we will find out why this rule matters. At the end of the day, it isn't about controlling you, It's about building habits that can handle scale. If you can't be consistent with 25,000, what happens when we give you 100,000 or more?
Exactly. Consistency is what makes you say to invest in. As WeMasterTrade, we fund trader, but we also study them. This rule tells us whether you're serious about long-term trading.
And we've seen it times and times again. The traders who respect its rules, they are the ones who get multiple payout, referrals, and grows into six-figure funding accounts.
So don't fear this rule. Understand it. Use it as a feedback tool. If your ratio too high, great. That means you got profit. Now keep going. Balance it out.
And remember, you don't need to calculate it manually. WeMasterTrade dashboard calculates your profit consistency ratio automatically. You can check it anytime under your statistic tab.
To recap, this rules is about the balance, not volumes. Aim to keep your best day under 20% of your total profits. Spread your wins across multiple sections and monitor your progress in the dashboard. We will work through the daily loss limits, tackle the maximum account loss, and examine how profit consistency shape your long-term payout and growth. And now we'll write the finals and perhaps the most overlooked rules of all.
The risk consistency rule, or what we call the discipline test. I think that's right. Traders often think the biggest enemy is market, but truthfully, it's inconsistent, especially in how much you're risking from one trade to the next.
This rule doesn't look at how often you win, it looks how stable your risk is and how professionally you're managing your position sizing. And if you're serious about scaling at Women to Trade, this rule is negotiable.
Let's break it down. At its core, the risk consistency rules is simple. You are not allowed to risk more than 2% of your initial account balance on any single trade idea.
Uh, and and that includes all losses associated with that trade idea, both closed losses and floating losses. Even fees, commissions, and swap are counted.
And for some account like the 5 to 10 novice package, this rule gets even stricter. There the limit is 1% per trade idea, not 2%.
Because consistency isn't just about the outcomes, it's about the process. The more erratic your position sizing is, the more volatile your equity curve becomes, and that's make you hard to scale.
This rule protects both you and the firm. It helps preserve capital, prevent large equity swings, and make sure your edge plays out over time.
Think at your account limit. If your position size pull up and down, 0.5 lost one day, 5 lost in 8, the system flags. That's not structure, that's call.
This is where it gets technical, but stay where the term trades idea isn't just one other. It's a group of trades that share the same logic.
If you open three buy positions on sell USD gold at different times, that's one trade idea.
Because it's the same symbol, same direction, and close around the same time. Even if you open them at different times, they're seen as a single and 5% from brick perspective.
So the system doesn't look at your trades in isolation. It groups them into the logical bundles and it allows and apply the 2% rules across the entire bundle.
Uh,
Go long on gold, short on GDP TBY and short on AUD/USD, and each position had its own distinct direction. And as that, there are three separate trade ideas, and each one can bring up to 2%.
Let's say you go buy on gold and then you go buy again and again. Then you now have the three positions in the same directions on the same axis.
Yeah, this is some trades that as one trade idea. So if the combined floating bridge or even to a loss from the position instead 2% of your starting balance, boom, you've broken the rule.
Let's go ahead on. Suppose you have a $100,000 account. The 2% smart risk purchase idea means you cannot lose more than the $2,000 on any trade idea total.
So you open two gold buys, one lot each. You don't place a stop loss. News hits, market drops 100 pips. Each lot loses 1,000. That's 2,000 total.
You're right, underline it's slippery or swap at a few extra dollar. That's it. Rule broken, account overflags, and liquidate depending on enforcement model.
And some on accounts, especially instant funding account with stricter tolerance, the spreads may result in loss of funded status or immediately closure.
And here are some tips to stay consistent. Tip 1. Set your loss size based on your account rate, not emotion. Know how many pip equal 2%.
Tip 2. Use stop loss orders religiously. Set them based on risk per trade idea, not random chart levels.
The tip 3 is don't stack trades without calculating combined rates. Just because one's position is below 2% doesn't mean three of them are.
Tip 4. Label your trade idea mentally. If you're entering on the same setup, treat it as one, cite it accordingly.
Tip 5. If you want to split an idea into multiple entries, do it smart. Scale it smaller. Use macro loss if needed. Keep the total exposure below 2%.
The most common reason traders break this rule, stacking multiple and try as one trade idea, thinking is still separate.
Second, opening high risk trades after wins, assuming they're playing with house money. Spoiler, the market doesn't care.
And the third, neglecting floating loss. A trade may not be closed, but the floating rate still count toward your 2% risk.
This isn't just policy, this is professional practice. Hedge funds follow this, banks follow this, real traders follow this.
Exactly, we're not here to micromanage you. We're here to protect your account, our capital, and integrity of the community.
And traders who internalize these rules, who understand that small, consistent risk is foundations of scalable capital, those are ones we grow, and those are the traders who go from the 25,000 to 1 million. And about the final thoughts, if you want to be a professional trader, you have to think like one, and professional traders always knows how much they are risking on every trade every day. And if you are still getting your lot size or opening trades because the setup feel right, take this your size, step up, get structures. This is more than the rules, it's a habit built now, and the path to bigger capital and longer payout become way more predictable. It's about the daily loss rules, maximum loss, profit consistency, and risk consistency rules. Mastery, you are not just staying compliant, you're building a foundation for serious capital management, long-term buyout, and scaling. And so far, we explore the packages, the rules, their essential foundation for sustainable trading. Now let's move to the markets update sections and take a look at the latest news that's may be influencing today's market trends.
Today is Tuesday, September 16th, and we've got a very interesting economic calendar lineup. Let's go through each major release and discuss what it means for the markets.
Absolutely, Paul. We actually start the day very early with CB President greeting largest speak at 1:30 a.m. Whether there was no immediate surprise, the tone remains crucial. It later leans hawkish, emphasizing that inflation break as their recession. The euros usually find some support, and if her focus is more on the weak roll and slowdown in Europe, they tend to drag the euro lower.
Exactly. I remember speeches like, "This don't always move markets instantly." Sometimes the reaction comes later when investors digest the message.
Moving to the UK session at 1 p.m. We got the average earning index and the climate cultures. Now warehouse steady at 4.7% with a quite sticky and signal ongoing inflationary pressure. And that usually support more hawkish Bank of England. But here the cost, the climate cultures rose sharply to 17.4k, well above the forecast of the 15.3k and way higher than previous minus 6.2k. That shows the labor market is starting so sudden.
So we got a mixed picture here. On one hand, wages remain strong, which means inflation may not fall quickly. On the other, unemployment keeps rising, which is a red flag for economic momentum. For GBP traders, this could mean increased volatility. Pairs like GBP USD and GBP might swing both ways depending on whether the market focuses on wage growth or raising joblessness.
Exactly, as a short term, GPP may struggle because labor market swing often overshadow wage growth. Trading will likely produce costly ahead of the next year OE meeting.
Then at 4 p.m., we shifted focus to Europe with the German JEW economic sentiment. The number came in at 25.3, well below the forecast of 34.7. That's a clear sign that investor confidence in the Eurozone's largest economy is slipping.
And that matters a lot because Germany is the engine of Euro. When business and investors sentiment in Germany weaken, it tends to weigh on the entire Euro area outlook. That's why the Euro could come under pressure, especially against the dollar of Swiss franc.
Now, the big highlight comes later in North American session at 3 half past 7 p.m. Canada released its inflation data. The monthly CPI was flat at 0, missing expectation of 0.3%. That's another surprise and could weaken the CAD. But looking at the core measures, we see the median at 3.1%, trimmed at 3%, and common at 2.5%, all consistent with expectations, but still above target.
Right, so the Bank of Canada is a top spot. Inflation isn't cooling dramatically, but the last monthly CPI got momentum is fading. If the market forgot the headline CAD could sell off, but they look at the stable core inflation, then expectation or sticky price pressure could still keep CAD supported. I think the immediate reaction will be bearish for CAD, especially against USD, and it was the new 40-day.
And that is for today live streams. So thank you so much for tuning in and goodbye and see you later.